Hello traders out there in Traderland, my name's Dez here at Grok Trade on Wednesday, July 11th, 2012. Final call. Final call for tonight. Of course, you want to get signed up for this. If you want a recording, make sure you get signed up before we do this at 9 p.m. Eastern Standard Time tonight. You have to register before that if you want a recording, and that is it. Matter of fact, we have got a new multi-month high on how many people have signed up. Hundreds have, and it's great to see. Anyway, let's get looking here at the markets as a whole. The Dow down only 48 points. It was down well over 100 points there for about the mid part of the afternoon after the Fed talked. But we are now down at 0.38%. The S&P at break even. Check this out. Dow down 0.5%. Russell's down 0.4%. The banks up 0.75%. Gang, the banks led the markets all day long. I really thought we'd be in the green by day's end. Didn't happen. And the VIX was down. The fear indicator down 4%. Gold up more than 0.5%. Silver up 0.73%. Crude oil up a whopping 2.6%. And the US dollar up just a fraction. Trend at break even. Transportation index down but still leading the Dow. Utility index up a 0.5%. And taking a look here at the markets, we have a pullback with a doji. Now the Fed did come out and talk today, and that talk brought news that they were saying that Fed officials, that is, are warning of a looming crisis. And furthermore, they were saying Federal Reserve policymakers agreed last month that they might need to take more action to support growth if the U.S. economy loses momentum. However, that was the only talk of any quantitative easing QE3. And the markets initially intraday took a quick little pop to the upside and then come crashing down. Show you a 5-minute chart here. So when this 2 o'clock announcement came out, we popped up here and then came crashing down. But then the last hour of the day or so, we just zoomed back northbound and closing at break even with a doji, a hammer type doji right here. But we're caught between the 20-day moving average, 50-day moving average. We're still not out of the woods yet. Now here's a couple thoughts for you. I wanted to go long at the end of today, really did. I was inches from pulling the trigger to load up on the long side because I loved what I've seen on the banks. I love that the VIX was down. I love that the S&P is at a major support line. However, I refrained from doing so. Because we're below the 20-day moving average. We're teetering with death right now at this moment. And even though we hit the line here, technically if you zoom in, we did not hit the line there. So it's relative weakness coming down. So with that, anything could happen. If I look here at the Dow daily, we broke that line. We're down below all major moving averages. We do have kind of a hammer type formation, but this is in a lot of trouble. The Nasdaq closed below the trend line, and I give that a lot of value to that. Because we closed below this trend line, I did not want to necessarily go long. We have some weakness here. Now if you look at this gray line coming down, resistance, it's acting as support. We're pinched between these two trend lines. That's something not to ignore. On small caps, we've pulled back. We're above the 20-day, 50-day, and we have this choppy bull pullback. Now this choppy bull pullback is not the prettiest thing out there, but it's really not overly shabby. We're staying above the 50% Fibonacci retracement. This thing could rally north. So I do like what I'm seeing there. But again, the banks, gang, the banks being bullish here above major moving averages. We're in this triangle, but if this thing pops and gets above this, markets could get bullish. A lot of gloom and doom out there, and I'm saying the markets are actually looking like something else could be the case. So again, last call. Get signed up for tonight's webinar, and for all you Grok graduates out there, we meet an hour earlier. So we'll see you tonight.